Hi and hello to everyone. Welcome to Vismaya Vibe YouTube channel. Today you are going to view a very informative video that is on everything about credit information companies. So in this video you will be knowing about the credit information companies and in a layman language that is CIBIL score that every bank or any other financial institution will be referring to while processing any of the loan proposal. So understanding your credit profile is very important and it's a need of a hour in today's life. As you know, every middle class or any upper middle class person will be in need of finance in one or the other situation. And nowadays, hand borrowings have become very less and everyone are trusting and they want credit facility from the approved bank or any other NBFCs. NBFCs means non-banking financial institutions. So we will go ahead in the video and we will learn the things which will be useful throughout your life. So first of all, introduction. Here we will come to know what is CIC and why they are important and who uses them and why. So as I already told, CIC is nothing but credit information companies, and why they are important? Because they have become the benchmark for assessing the credit risk. What do you mean by credit risk? Credit risk is nothing but if a bank provides a loan to any person, so what is the risk involved in the repayment of the loan provided? Whether that person will repay the loan or not. So this will be assessed by referring to that CIBIL report or any of the other CIC report. So who uses them means, as I already told, banking and any other financial institution will use them. So let's come to the definition of CIC. A credit information company is a financial institution that collects, maintains, and analyzes your credit related data. They create something called a credit report, a summary of how you have managed loans, credit cards, and repayments. So as I already told, credit report contains the loans which you have availed and the enquiries which you have made in past years, and by assessing all those things, the score which the respective credit information company has provided to you. So these are the things which a credit information company will provide in their credit report. So what does CICs do? CICs collect public data, credit transactions and payment histories of individuals and companies regarding loans and credit cards, among others. That means these CICs collect the data among all the banks and financial institutions across the nation and maintain a database of that particular person, and with all those algorithms and calculations they provide a report with a credit score which the banks and other financial institutions will refer to it. So their primary function is to gather data from various sources such as banks, financial institutions, lenders, and other credit granting entities, and then compile this data into credit reports. Banks, non-banking financial institutions refer to the CIC's report and score to decide borrower's credit worthiness before granting loan or issuing a credit card. See, this is what I told in the beginning of the video. So whatever the loan which you need and to be sanctioned from the bank or any other financial institutions, even it may be a credit card, so CIBIL or the CIC score will be the benchmark. So it's like a entry pass. So if your CIBIL score is very good, then you will be getting that respective credit facility. If it is bad, then you will be not getting the same. So it is very important to know and learn about that. So let's proceed in the video. As I told, CICs collects and maintains credit records of individuals and businesses. So they help banks and NBFCs to assess credit risk. And these are regulated and licensed by Reserve Bank of India. So we know that RBI is the key institution and the regulator when it comes to the financial sector. So in this case also, CICs will be regulated by Reserve Bank of India, the apex institution. So regulation of CICs. CICs in India are licensed by Reserve Bank of India and governed by Credit Information Companies Regulation Act 2005, that is CICRA, and various other rules and regulations issued by RBI time to time. So as per section 15 of this act, every credit institution, that means either it is banks or NBFCs, should be a member of at least one CIC. So CICRA also stipulates that a CIC may seek and obtain information from its members only. So if any NBFC or bank, if it is not a member of that particular CIC, then that company cannot seek any information from that particular bank. So that's why as per section 15, RBI has mandated that every credit institution should be a member of at least one CIC. Thus, if a bank seeks information from a CIC, it will get the information given by other institutions only. So by this sentence, we can understand that credit information companies will get the data from all the institutions and it will prepare a credit report as per the algorithms and provide the ready-made data to the members who seek the report from them. That means it will not have its own data. It's not the primary data. It's the secondary data only. Primary data will be with that particular banks or NBFCs. So it will be collecting from those institutions. Hence it is a secondary data. So at present, 4 credit information companies are given certificates of registration by RBI. So this is the main information which many of the people are not knowing or unaware of. All think that CIBIL is the only CIC company present, but that's not the case. So we'll learn about this in the next thing. What are those 4 CIC companies? One is Credit Information Bureau Limited, that is CIBIL. This everyone is knowing. So next 3 are Equifax, Experian, CRIF Highmark. So bank will refer to all these CICs. So all are valid. So based on the quantum of the loan and type of the loan, they will prefer different CICs and they will come into a decision of granting the loans. What data do CICs collect? Number 1, loan accounts in the particular name of the individual. That means personal loan, home loan, vehicle loan. And the second one is that credit card usage and the repayment. Repayment is nothing but whether the payment was made on time or it was a delay payment. Third one is defaults or late payments. And fourth one is credit inquiries by the lenders. This means in a given point of time, how many times that particular individual has approached a financial institution for the loan. All these inquiries will be recorded in the particular report, and more the number of inquiries is the less chance of getting financed. Now we will see key facts about CIBIL. It is the leading credit bureau and CIC licensed by the RBI. As I already told, it is a basic report and the key report which is used and referred by every bank and financial institution for assessing the credit risk of that particular individual. And the primary function of it is to collect and maintain financial data as provided by the lenders to further generate and provide credit reports and credit scores for its customers. So who are the customers? Customers may be the individuals or banks or NBFCs or any other entities. So it maintains credit files on 600 million individuals and 32 million businesses. So this shows how vast is the CIBIL database and how banks and NBFCs are relying upon it. So as you see, CIBIL India is a part of TransUnion, which is an American MNC company. Hence, credit scores are known in India as the CIBIL TransUnion score, since it is origin from the TransUnion company. Now we come to the important aspect. What is CIBIL score? It's a 3-digit numeric summary of your credit history. So it's nothing but a 3-digit score. It is calculated and derived using the credit history found in the CIBIL report, and it usually takes into account the borrower's credit profile over last 36 months. That means 3 years credit history is taken into consideration for deriving the score. The value of credit score may range from 300 to 900, and lenders can check the CIBIL report and CIBIL score or CIBIL rank to evaluate the risk of lending to applicants and accordingly approve or reject the new loan or credit card applications. This I have already explained you. So if the CIBIL score is good, then the chance of getting approval is more, and if the CIBIL score is bad, then the lenders will reject the application. The closer a CIBIL score is to 900, the higher the chances of the customers getting the facility or getting approved. That means more the score, more the chance of getting the loan approval. So as you see, 750 and above is considered as an excellent credit score, and 650 to 749 is good, and below 650 needs improvement or nothing but a bad. If the score is below 650, then the proposal will be rejected in the most of the cases, and it will be not sanctioned by any of the lenders. Importance of credit score. So if the credit score is good, easier loan approvals, lower interest rates, higher credit limits, and job and insurance decisions also will affect on the credit score. See this last point, recently in many bank recruitments and all, this condition is there. That means they will scrutinize your CIC report. If you are found default in any of the CICs, then the chances of rejecting your job is also there. So that's why all youths who are preparing for banking exams and other competitive examinations, so be aware of your credit score. It's very important. And next is the higher credit limits. Higher credit limits, if your CIBIL score is more, then the lender believes that your repayment capacity is good and he will be able to sanction the more limits and lower the interest rates. So this is the one of the attractive thing and the benefits of the good credit score. If your credit score is more, then you will get the loans at the attractive interest rates compared to the bad. Accessing your credit report. So how an individual can access your credit report? One thing is that when you apply for any of the credit facility, that particular bank or NBFC will generate that particular CIC and they will go through that. That is one part. And if you are not applying for any of the loans, then also you need to know about your CIBIL score or your credit health. Then this is the thing. One free credit report per year from each CIC is available for every individual. So you can visit their official CIC website and register it and verify the identity, and you can download your report free of cost. But only thing is that one free report will be provided per year. Common mistakes that individual should avoid: delaying EMIs or credit card bills. So too many loan applications at once. That means, as I already told, the credit inquiries that should be minimum. Ignoring your credit report this is one of the biggest mistake. So no one will generate their CIC or no one will be bothered about their CIBIL till they go and approach for any credit facility. And that point of time, if your CIBIL is bad, then the chances of rejection will be more. That's why precaution is better than cure. You need to know about your credit health and not updating your contact information with the lenders. See, the algorithm of the CICs work in many ways, and one of the way is that your mobile number and your mail ID, your previous mobile number which you have updated in your bank or the financial institution, and later you are not using that and it is being used by some other person, he updates the same in his profile and he takes a loan and he makes the delay payment, but that will be affected to you also, because based on that mobile number and email ID your CIBIL score will be degraded. That's why timely updation of your contact information with the lenders is very important. And here comes the major thing, how to improve your credit score. So this is the question many will be having in their head. One is that on time repayment of your loans. So whatever the loans already it is there in your name, do on time payment. And next, less credit inquiries. So unnecessarily don't get your profile inquired for any financial requirement, and balanced mix of secured and unsecured loans. So this drive your credit score. More the secured loans, for example like gold loan, housing loan, mortgage based loan, your credit score will be more. If your unsecured loans are more, then chances of degradation of your score is more. That's why, as like a balanced diet, you need to maintain balanced mix of secured and unsecured loans. So we are at the conclusion of the video. CICs empower smart financial choices, as I have already told in the video. Regular check of your credit health is very, very essential, and a good credit score is nothing but a strong financial future. That means if you are having a good credit score, then you will get any of the financial requirements from any of the bank or any NBFCs whenever you want. Start monitoring your credit health today. That's very essential, because precaution is better than cure. You need to maintain your credit health for all your financial requirements which may come in the near future. So your credit score is your financial fingerprint. Protect it. This is what I can tell in the nutshell. So thank you for watching. Please like, share and subscribe our channel.